Hello, hello. Good morning. Welcome to another US Futures Trading stream. Today is Friday, September 29th. It is 9:14 Eastern Time in the US. I'm a little bit late today. I have some stuff to do. I won't be able to be in my trading desk today. Maybe just until just the first period of this market. This market, or the market has entered. The market has ended one time frame lower, meaning that has ended a trend. There was a trend to the downside, and that is no more in the daily time frame. We can see the monthly, for example, is coming down, weekly is coming down, daily was coming down, very, very hyper extended to the downside here. A lot, right? All of this inventory longs now are out. The market has found support at around this level, around this range, is for the range. This may be a low. We may have excess. If the market comes back inside this range and closes in here today, which will be the end of the week, it will mean that we have excess, and we may have excess in the weekly time frame in the next, if the next week start trading inside this range. The same thing can happen in the monthly. We have 2-month range here. This can be a look below and fail. The thing, if it's up here, Monday is October now already, right? It'll be trading back inside these two ranges. The thing in the monthly, it has look below, look inside this 13-month range, very huge range here. And right now the market is in between these two distributions, right? This huge accumulation of trading up here and down here, and it is right there. And when we zoom in here, we can see that the structure of the market is very weak here, very weak in the upper side, very weak in the lower side. This market can't go anywhere. And zooming in even more, which is when we use profiles, we can see that there is nothing going on in this market, just short-term framing here. And a lot of trading that's happening basically between small traders and big traders here. The market gets too long, and along comes a big or bigger participants, not necessarily bigger time frame traders, but bigger participants, very short time frame traders as well, because what they do is they take this, for example, you have short inventory here, and they take this inventory out, boom, and just that's it. And then market gets too long, traders get emotional, small traders get very emotional, attached to this rally, and then after that there's liquidation of these longs. Have huge liquidation, lack of access on the upper side. The pullback is exactly to halfback, exactly to the 13-month range high. No excess here on the upper side, no excess here. Now this rally high has no excess, the rally high has no excess, and it is right like 2 ticks above this high, which makes this high very, very weak. And the overnight traded through this level. So we are being aware that how this market is having corrections in the overnight, which I hated. I really hate that because I don't trade the overnight. Now we have a spike, right? You have a spike here. The overnight has a spike. We have CP overnight spike. We have CP very muted reaction to this spike. This is I don't know. I could say that there is nothing here. What's happening here? There's nothing here, right? It came down to half back of this period, which is also yesterday's high. Now it's being bought again from this half back. And we can consider this time of the pre-market as, kind of like a regular session as well. Because traders are trading now. Daily time frame traders are trading now. Still high volume, 360, I think that's good. How much this period has? It has 60, it doesn't have that much. And from yesterday, I was, I highlighted my home job. What the heck is this? I wasn't present yesterday in the afternoon. I didn't have to do a replay. But, I can see the market going higher here, going higher. There's some rebalancing of this inventory and then go higher. And then it seems to me like it looks like the beat just disappeared, right? The market was being bought and then just, boom, they just go away. As I say, I didn't do a replay. I didn't see how this happens, but I have the impression that is how it's happened. It has somehow the market opened somewhere up here and then it just collapsed here. And there was nothing. Buyers just disappeared here. Disappeared. The bid just, boom, all the bid was removed. No big blocks. And we have another thing that I also consider is, I remember Jim when Jim talked about the pain trade. I didn't know. I heard about pain trade, but I didn't know what pain trade was. The pain trade is when basically you can find another explanations out there, but basically when bigger time frame or hedge funds or all that kind of participants get caught short, which in this case is they are not invested, they are underinvested. They see the market going higher, and they are out. They are not taking advantage of that. And the way how they are measured against their peers. If somebody in the media is 10% gains, 5% gains, and they are winning 1%, so that's not good. It's the same for them. For them to not to be in this rally is like being cut short for us, right? That is the pain trade. That's part of the pain trade. But that's not what I got from him. What I got from him is what he said after that. What he said after that this is a lifetime occurrence. You will see these kind of events happen in your trading career maybe once, twice, maybe, just a couple times. There's not that much that happened. We all got caught short. The short time frame, the shorter the time frame we trade, the more often we are caught short. How many times you have been caught in a short squeeze, for example, right? But it happens to everybody. It happens also to these traders here and this kind of money as well. It doesn't happen that often. Right? That's what I got. And now that thing, the pain trade, that could be over now. So the motivation, the fuel, the fear of these hedge funds or these big managers being caught here, there's no more, right? That catalytic is not in the market anymore. Okay, that's what I'm having on mind as well. So I don't expect something huge or constantly going higher. I think. I don't want to be biased, right? But down here, there could be some rebalancing here, and the market is in between two major moving averages. Found support here. There could be some trading here, maybe some short covering rallies that can appear, and the market could come lower. Now, next week also, At the end of the week, we have non-farm payrolls as the only event that is out there. And the week after that, banks start reporting earnings. No? And voila, we have a new earnings session. Well, we have a new earnings session. Everybody's going to report good earnings. And the market is going to make new highs. Okay? That's what everybody is talking. That can be talking next week. In just a couple sessions, the market, the talk in the street went from the market is going to hell, we are broke, this is the end of the world, to this is it. It is just incredible. It's just, can you see how the media, how the trading just can catch you, right? It is important to be aware of what other people is talking, but not to get a bias from them, not to get too biased from them, is very important. It's very important. Okay, now after PCE, my reaction or the market's reaction was very, as I said, very muted reaction, but still we have a gap. The market has gap to the upside, which corrects this weak high, which gives access to this 3-day range here. The market's right here, and POC of this day. It also repairs the inventory from this overnight that happened here that we cannot see right now, but it's there. There was a very prominent POC over there. All those things are repaired, and what we have is a gap. We have a gap to the upside. Not just a gap, but also a spike. Spike guidelines are, for me, the hardest times I had is when the market opens inside the spike, which seems like that's going to be the case today. A strong market, positive, the more positive reaction is opening above the spike, the most negative reaction is opening below the spike. And right now is right inside the spike. The next thing is a gap. Gap guidelines is go with any gaps that are not filled quickly. They are rather not filled quickly, right? And one of the best trades out there is the market trying to fill the gap and failing. So that's a long. Notice also how overnight inventory is long. Has a weak pullback here, exactly to this, what is this? This level. I don't know if traders can see this. Maybe some will see the August low, previous month low. It was exactly that, but also is not just August low. I guess August low have this inside, right? Because this is a 15-day range low as well. I think this is more important, But you can see that there is this is a multi time frame reference here. We have weekly reference and monthly reference, and now it's also intraday, a daily reference in the intraday trade, because this thing is also, just one tick more or 2 ticks more to the downside closes these distributions here in the overnight, which by the way targets the opposite side, targets this low, which notice where this market has been bought from, Halbach. But all of this trade here, you can have an idea who is doing that. It doesn't mean it's going to collapse, it doesn't mean it's going to break now, but it gives us an idea what is happening here and who is doing what. This information can be useful, can be very useful down the road if there is nothing today. Right? It seems that we have good access here this day. We have good access here as well. Value now is pretty much higher relative to yesterday. Yesterday was higher relative to the previous day. There's a very prominent POC here. The market when we have these kind of things, the market tends to go back and forth, tend to have some, spend some time before going high. If it doesn't have that, it's also a sign. You have only 1 minute here from this, they notice where this market is, right at this huge volume here. The next volume, accumulation volume, is up here. Next one in here, and I am following volume here now because that's what I see, but that's what I saw markets doing. When market doesn't have volume, it tends to go to these areas where, in this case, are shorts, right? Shorts here, shorts here, shorts here, shorts here. Notice how close one, how kind of like a potential for firecracker effect here. I'm not saying that's going to happen. I'm sorry, I'm speaking too fast here, but I just don't have time now. The market is going to open in a couple seconds. The market is open now. All right. What happened? What is happening with the bond market? No, the market is above yesterday's range. Boy, the gold has a huge spike to the upside. That's interesting to see how the gold reacts. The bond market is back in range, which is below this 2022 lows as well. All right, let's see what happens here. Do we have volume? Oh boy, volume very low today relative to yesterday. Market's trying to fill. If a gap is going to be filled, it happens right away. Volume has high volume from the opening. I mean, the market has high volume from the opening. The spike in gold is important because, the gold tends to move in the opposite directions to the market. That's why I'm watching that market. I don't pay. I trade off of that. Okay, the market is coming back to a spike, to the base of the spike. I'm still watching this. The highest. God. I know these kind of things are always hard for me, and now we have a spike, right? I mean, we have a gap as well. This is not good anymore. yesterday, there was not yesterday, but yeah, there was something here. I hope you've seen this thing. This could be seen yesterday, and this low also could be seen the day previous. You need to have patience to see those ones and be present in the market. In the same way, for example, we compare volume relative. I mean, today's volume relative to previous day, right? Today's is a little bit lower, but it's higher. It's low. Okay, but it's always relative to something. When we check this movement, for example, how fast it's doing? Can you see the movement is trying to go really slow, kind of grinding its way to the downside? Is this the same way how it was traded yesterday? Or the same way how it was traded yesterday, the day previous? If you remember what happened yesterday, I was here. You know? Remember how is this relative to this opening, for example. And now, when the day starts to develop, what I will do is I will compare what's happened. For example, the next period B or C or D, what happened on those periods relative to this one, for example. I don't see too much enthusiasm here going to the downside. Again, mechanical buying here. The buying is coming from the base of the spike, from the low, this distribution. It hasn't closed the distribution. Right? It hasn't closed this distribution. The market is trying to close this gap. It just dries here exactly at this high. This is a mechanical buying, right? This is a mechanical buying. And the stop is just here, one tick below this, and that's it. You don't let, because the market comes back in here, can come all the way down to here. Can close here, taking this one, can take the market all the way back down to here. But remember the context, we may be in short cover. The market can have some short covering going on here. And also, today is end of the week. Today is end of the month. There is going to be a lot of interest in doing something here. What do you think is the inventory here? What do you think traders will do in the last week, the last couple weeks? They were selling, getting short and short. There could be some options playing here as well. Naked sellers, naked options selling here. But if the market is going lower, why do you think these traders that that sell options for a quick buck, for an easy buck, quote unquote, they will be selling? They won't be selling naked calls. They will be selling naked puts. Okay, so that's something that can be there as well. If there is any kind of rally, that momentum can join, and this could be brutal. I'm not saying that's going to happen, because another thing that is happening, we have this bond market, right? We have rates now that are in extremes, right? When this, I would call it market indicators, but the market is always looking, always has something that is fixated on at any given time. It can be, in this case, our treasury notes, right? This could be the bond market, the interest rate. Before that can be gold. Before that, crude or something. There's always something. Again, selling or buying coming this day half back or something. Right? Now the market has the potential to make a 4-day range here. 1, 2, 3. We already have a 3-day range, and the market is out to balance of this 3-day range and also previous day range as well. The market is out of balance. Just trying to close. I don't like this low here. Volume. The thing from these markets, it was weird yesterday and these 2 days here, because the VIX was really high relative to the weeks previous, and we have, which means also that the ranges are wider. These ranges are wider, and we have huge accumulation of volume. We have this 10. For me, higher volume is about 10Ks, either in the 2 ticks charts or 1 tick charts when there is really low VIX. I've seen a lot of volume, accumulation of volume here. Let's check it out, where this volume is being accumulated. And this movement, if the market goes higher here, it will remove all these shorts here. Could be forced out, and a short covering can fuel the market here. If it doesn't take this range, the next node of volume is down here. Gosh, what an ugly day yesterday. Man, this is really bad here. It looks bad here. I don't like how this shit looks. Look at this one. This is better. For example, really smooth, nice. Very crazy trading going on here. You know, emotion. Short covering is emotional trading. If you are caught short, you won't think. You will just, you know, scream, "Get me out!" Notice how this day is. Right? This one. All of them. And notice what we have yesterday. Really crazy. Happens in all time frames. What? What are you doing there? Stop eating my wood. All right. That's just some. Okay. The base of spike has been taken. How many times? 10 minutes into the first period. The market is trying to close the gap. This low has been repaired. Continuation, we see the market taking this low high. Yesterday that was really nice monitoring. It was easy to monitor upside continuation. Every single level that we have in the upper side was being taken. It would be something like this, for example, right? The market goes down, this one is taken, the next period this one is taken, and this one, and this one, and this one, this one, this one. No, every single one was being taken. Now the next thing is taking this high out, closing the gap. And if the market closes the gap, that changes everything here. Because right now the market is looking to the upside now. The market is out of balance. When the market takes this low out, the market is coming back inside balance. Okay. Still watching this in the upper side. Don't put that thing. Can the market go back there? Can this be a reference for the next period? And this market also, these markets are trading. If there is something in the market, I mean, in whatever is going on, right? From my observations, I have noticed that the first 5 minutes or the last 5 in this kind of market, very mechanical trading, the first 5 or the last 5 have been relevant. And that's what we do all the time. Because what was valid yesterday or was valid a couple months ago may not be valid anymore. Because markets are always changing, always evolving. That's why we say that all the indicators work. They work just enough to make you believe that they work all the time. The main thing here is the market, what the market is doing, not what the market will do. There is so far, there is nothing here, man. There's nothing here. The weak references in the upper side from yesterday have been taken. What remains is this one from yesterday. Oh, and look at that. This is also, this is also overnight low. Overnight inventory is very low. Okay. I'm not trying to look when I find myself looking for trades. I'd rather stop right away. Okay. And the other reason why I try to, I wait and observe the market because as the market develops, I have something to relate, something to what I have something there that I can compare to. Notice how this dried here. Did you see the drying? We should tell how this coming lower and how it's struggle down here, grinding its way down, and now it's, we're having a rally here. And the speed. Notice the difference, the speed, the tempo between the break and the rally. But there's nothing here, man. There's nothing here, this freaking market. As you can see, what I'm doing is I'm watching this market can close this gap. If it doesn't, it struggles too much. Now the second attempt is coming faster now. Do you see the difference with that? Between this break and the last one. It just, after this small rally to hold back, the second time it just comes fast. It was easier. That kind of action is, the market gets too short in the very short time frame. It gets too short. It cannot go lower, so the market has to go higher to remove the inventory, to remove the weak shorts. So stronger ones can take their place and do the next push to the downside, which extends the market. In this case to the downside. Now we have low volume here, high volume here, medium volume here. There might be some selling, some buying here, coming close to this high. Now we have, what is it, 20 minutes? Almost 20 minutes. Okay. What happened the first 5 or the first 7? 5 minutes. Let's round it out to 5 minutes. Okay. The market is trying to close the gap here. It has taken the base of the spike. what will happen now. I'll be observing what happened in the last 5 minutes. We still have something like 3 5 minutes to go here, because the market, what I see is the market starting to close the gap here. Volume here. The last five and the last stage of this period will find the market trying to close the gap or rallying towards the high. Remember, this is wide as well. You know, these wide profiles here tend to be areas where the market trades back and forth. There tends to be some trading. Also, there's this huge volume here. We have almost 50,000. No, 40,000. 40,000 levels here. Like 6, 5, 3, 6, 9. From 65 to almost 10 points. 65 to, okay, from here to 74. 74. Down. 74 is down here. No way. Here. You know, this, I'm talking about this area, no? Notice how volume dries here. And the accumulation is below this. So this could be still here. Oh, nice taper here. Nice taper. Meaning that it dries here. It dries. There is no sellers right now. So there are no sellers here right now. That can change at any given moment. That's what trade is about. Anything can change. If we knew what the market will do, we will be sure the market is going to keep doing what it's doing right now. You know, everybody would be doing lots of money. That's not the case. We know that. It's actually quite the opposite. The market's back inside the weekly range, inside the monthly range. It's very close to this high. This high is questionable. Remember, we talked about this coming from a while back. The other one coming from POC. Gap here. This is FOMC, non-access in the high, coming back from FOMC, emotional day here, coming in the setting from value low. This is crazy. We're really weak structure in the upper side. The lower side is not better. The lower side is not better. The lower side is as bad as the upper side. Oh, yesterday the long here, you could see this. You could see this thing. Oh, it's 9:53, 7 minutes. You can see the market dies here. It just dies. Now, right now, in the low, we have 120 contracts. It just stopped here. There were like 5 or 6 contracts. God, man. You see that? You see this level? You see where the market is at? There could be something there. The 4,300. There could be something. This could be your stop or the 4,300. A little bit wider, can you see? Because the VIX was higher. When volatility is higher, you have a tendency to, you have to give the market more room. All right. We are almost into the last 5 minutes of this period. So, all gap has not been closed. Having this amount, based on what I have seen the last days, weeks, month, is if this market has tapered here, the only way the market can close this thing is with a spike, because we are almost done with period. Just 3 more minutes in period, and taking this level here will require a spike to the downside. Come on, don't tell me it's going to open at the right at the center. Isn't this beauty? Gold is falling now. It has a huge opening spike now. The gold market has almost got the low. The bond markets are having a nice rally. That's good. That removes the pressure from the markets, from the equities. Crude is falling. Dollar is coming back higher. Also remember what happened yesterday, even. What we have is a rally. Traders are, we are humans. Traders are humans. Critics. And we build habits really fast. They saw the market rally yesterday. That's what they do today. And they will keep on doing that until it doesn't work anymore. Okay. 3 minutes to go. The next reference on the upper side, and the market is going lower. Right? It has failed. So far, has failed to close the gap. What's the volume? Ooh, nice volume here. Yesterday, volumes dries at the closing, right? There was good volume throughout the day, except at the closing. Now we have a little bit higher than yesterday, which was higher. This has more significance than yesterday, but now we are going to be a little bit high. Now that makes me question, right? That made me question this downside movement. The downside movement didn't dry. The downside movement didn't dry. I have good amounts of volume here, 15,000, 16,006. Now we don't see these big blocks, right? When we had 1,000, 2,000, we don't have that one. We don't have those kind of activities going on, no? Really barely here, one block here, 150 contracts. This could be 350s here, and 50s. The short covering happens, when all the traders or all the positions that started here, start to cover. Right? That's the process. Short covering. It's not necessary or not just only shorts here that are being forced to cover. Okay, because there are multiple things that are going on at the same time. This both, right? Traders get so emotional. The market finally they can see the market is going lower. Oh, okay, this market is going down to 2,000, and they start to sell here. These shorts are forced to cover here, maybe here, and also see there is some short covering, some hedging that can be going on, especially in days like this, the days end of the month. Many things can happen today. Wild things can happen in days like this. It's not unusual, but bigger trading uses days to squeeze shorts. Consumer sentiment has come out. What is the reaction of the market to that? Very muted. There's nothing here. The movements to the upside, okay? Value is higher. Value is higher. What traders do when the market is going higher? You got 1, 2, 3 days now, including today, the market going higher. They buy the breaks, sell the rallies. Professional traders do that. The market has come back inside this distribution. Okay, this movement has ended. What? But habits die hard. Now traders are in the habit of selling rallies. Okay, selling rallies, short-term retail, very short-time minded traders. They are in the habit of selling rallies from these days, from the whole past 2 weeks. And that kind of activity actually can fuel, if there's any movement to the upside, when traders keep short in the market, that's what can come out. Just a second, please. All right. I think something is brewing here. I'll need more time to watch this market. Remember this wide area, okay? Back and forth, back and forth. What is the overnight here? Because this is the overnight high is from this day. Oh, look at this. Oh, this is something I forgot. This is the lower. This. I don't think this is valid anymore. This is not, because all the shorts here. I think that are gone now. But just notice where the market was sold from this. This is very mechanical, very mechanical. I mean, the downside movement don't have the strength, especially coming from this overnight. And this could be a movement, a grinding movement here, grinding movement. I don't know. You know, when I try to make sense of the market, usually that's a bad day. I have a bad day because I have a bad day. Okay, because I'm getting very anxious to do something. I'm rather just better. I rather let the market show me, because sooner or later there will be something there. If there is not, well, that was not a day to trade. That was not a day for me to trade, to do anything. The main thing here, this high has been corrected. This now is got closed. Now, overnight inventory was long, right? Overnight inventory was long. There is an attempt also to do a counteraction to the overnight inventory, which is, by the way, super weak, especially because of this pullback we have here. When I see this kind of pullbacks, man, this is just kind of like I got a lot of cautious, and I'm more cautious when I see this kind of pullbacks to exact levels, right? Especially if it is saddle or last, or it can be POC or hardback from the previous day. I talk about this that maybe not too much traders can see these levels, right? Did you have this in your charts, for example? But this is a multi-time frame reference as well today. Every day is different. And there's a lot of repetition in this market, but repetition with variation. There's another bunch of traders are selling the rallies here in cash. I wouldn't sell a rally here. I wouldn't sell a rally right now. I wouldn't buy a break. I might be buy a break here. Better. Location. The thing is, if the market gets too close to this level, it weakens this level more, because it's even close. If taking this level out gets the market closer to this level as well. And that's the next reference in the lower side. This is a level to monitor for continuation in the lower side. Taking this level out can take the market somewhere in here, which could be a good, could be a good pullback. Let's see. There's nothing here. Seems like I am looking for something here. All right, I have to go. I wish you guys a good rest of the day. Stay safe out there. Have a great weekend. Bye bye. This is a tiny gap actually. Tiny. Look at these gaps here, this gap here. Tiny gaps, these ones are really tiny, I was like compared to these ones. Big gaps are easy, are hard to close, but small gaps are easier. Or should be easier. No, it wasn't that. It was really big here, almost this size. Was this? No, kind of like 3/4 of this. Interesting. Interesting here. 3D range, the potential for a 5D range here. And we are above this time frame here. Max back inside this range. Max back inside this range as having it is actually having acceleration, penetration into this range. The weekly has excess. I would like to see how this market closes in the weekly time frame. It closes inside. This is good excess on the lower side. Here as well. If the market closes really close to the high of the weekly, by the way, what is the weekly here? How high? What's the weekly high? 43.81.5. 43.81. Oh man, this is not that far. 1, 2, 3, 4. Oh gosh, this is also weekly. Weekly high. I mean, today's. This is this weekly high. This week high. 1, 2, 3, 4, 5. Closing really close to this high increases the odds the market can take that high, which will mean that the trend to the downside in the weekly time frame is over. There's no more. Love to see how today closes. God damn, this is interesting. This become I had to leave here, but this B is an inside bar. At least the first 15 minutes. Okay, now we go. Alright, man. Alright, guys, see you. Have a wonderful rest of the week. Stay safe. Bye bye.